Hello everyone, this is Evan McCarthy from evanmccarthy.com. This video today is going to be the technical analysis for the e-minis, the ES or the S&P 500. This is going to be for the week of February 4th, 2019. So as you can see down here, we'll talk about a couple different moves. Well, let's remove this one here real quick. We'll talk about that here in a little bit. But the first one I wanted to talk about was this long move over here that is just about complete. As you can see, here's the gray box. That's that 38 to 50% Fibonacci retracement. So this is using the 15-minute chart. I'm just showing it on the hourly chart since it's a lot easier to see. Started way back here on December 3rd. Came back down all the way down to the 261, the opposite way, the Fibonacci extension level. Show you right here. There you go. And then ever since then, ever since about just after Christmas time, it's continued to go up. Well, it's just about completed this move now. That's going to be, I'll just draw a yellow line right here, where the yellow line is going to be at around 27.21. So when price comes up and hits that, then that move for the long side for the lightning trade will be over. So that's one of the reasons why going into this next week, moving more towards a bearish stance for the market. It still needs to, now price still needs to go up to about 27.21, 27.22 to officially complete that move. Still hasn't gotten there yet. Got as high as about 27.17. Right now it's at 27.04. So it still has just a little bit more to go, but that should get done here probably on Monday or so. But I want to show another chart here. This is going to be a quicker time frame, the 5-minute chart right here, because what's starting to set up now is a bunch of setups to the short side, and what you have here now is using this pivot point right here, this pivot point right here. Price came down and broke out, came up, hit 38, never hit the 0, went up, hit the 100. Now it's just taking off since. So on the opposite way, I think it's a little bit above the 161 Fibonacci extension level, and yeah, it's just a little bit over the 161. So it doesn't mean price couldn't continue to go up higher some, but what we're looking at for the move, the exit for this trade is just going to be above 50% Fibonacci retracement level, which is going to be around 2650, 2651, just to be safe. So what price is currently at 2704, looking for it to go down to about 2651 to get out of it. Like I said, it doesn't mean it couldn't go up, but eventually price is going to come back down and take this out around 2651, so just keep that in mind. But what I really want to show, the main reason why I'm moving more towards a bearish stance for this market is, I'll get rid of this right here, is this setup right here. Here you have it going down from using this pivot point and that pivot point. Price came and broke out, almost came down and hit the 127, never did, so it's still a valid lightning trade. We're going to hit 38, so that moves the exit down to the 0 line, which would be about 24.05 just to be safe. And now what we have is price continues to go back up. So currently the exit is still at 24.05 from where it's at, but what I would like to see, since the majority of my stocks are long, I really don't have any shorts in there, is for price to continue to go up to the 100% line, which is going to be 28.20. Once it hits that, then the exit for the lightning trade goes just above the 50%, which would be around 26.18, 26.17, and that's what I like to see. But where price currently is right now, the exit is 24.05. But like I said, for this other little trade right here, I'm expecting it to go down and fill that 26.50 before it does anything else. So in a perfect world, what I'd like to see, price go up, take out that long up there, that would complete that big move up to the upside around 27.22, come back, hit 26.50, take that out, and then go back up and hit 28.20. So then that way it would move the exit way up here to around 26.18. So it'd get it out of this area down here around 24.05. But that's why I'm looking at more on the bearish side to the market. Probably the worst case scenario which could happen is price goes up and hits that, the 27.22-ish, and then goes up to 26.50, but then keeps on going back down to 24.05, that area down there. But those are the two scenarios that are eventually going to play out in the market. I think the smaller one hits first 26.50, and then after that, just have to see what we think the market is going to do. Now there is a smaller lightning trade to the upside right here, but it doesn't have that much more. There's not much you can do with it. So as you can see, using this pivot point down here and that pivot point up here, price came and broke out. So that puts the exit at the 127, which is going to be 27.76. So in a perfect world, like see that continue to go up to hit, and then just keep on pushing up a little bit more to hit the 2800, 2810 mark to get us filled with that lightning trade to move the exit for the short side down here over there. So let's see what's going to happen, see if the momentum keeps on carrying it up, or see if the short side to fill those lightning trades are going to hit. But regardless of what's going to happen, it eventually price is going to retrace back and fill this lightning trade. Whether it goes up and hits that up here first around 28.20 and then retraces back to 26.15 area, or if it just goes, or if it never hits the 28.20, then it's going to go back and hit the 24.05. So hope that helps. That's what we're looking for. It looks like for the little bit long-term time frames, the momentum is definitely towards the downside, where we had previously they had momentum more towards the upside when you get those longer move lightning trades. So hope that helps. If you like to see anything, let me know, and have a good one. Thanks. Bye.